and welcome to another episode of the Conquer Risk podcast. I've got Manish here with me, and today we are going to talk about the best content of the second quarter. We've got some interesting revelations in this process, and hopefully you'll find a little good reading, a little good watching, and a little humor along the way. Manish, do you have any thoughts as we get going?
No, just we decided to do this, and it's been well received to go each quarter and review what did well and what didn't, and so we want to keep this going and hopefully provide some value as to topics that are resonating with different advisors. So, with that being said, let's jump into it with blog posts. There was something that was pretty surprising that you did recently on the need for OCIO services. I'm always going to struggle with that.
It's okay. I'm laughing. I have to laugh at that because the way I hear you say it is there's a big surprise because it's something that I wrote.
Yeah, well,
we all know I really don't like to write, and I'm not very good at it. So when I kick out something that actually gets read,
all right. Well, that's not. I mean, what? All right. What was the surprise then? You dive into that.
Well, I think the surprise for me was not, I'm having a little humor there with that first piece. But the fact that this was released, when we're talking about best of the first quarter, this was released on June 25th. So it only had a week. I mean, there's obviously something that an advisor or two found interesting about it. And it's not an interview. It's not anything that anybody else is necessarily going to share. That was the big surprise for me. I really was pleased to see that was resonating with advisors. It was worth looking at, worth reading.
Anytime you are tracking these statistics over a quarterly basis and something hits like that you don't actually promote that much, and it's been five full days, I think it's time to go back and double down on that topic. So that's something that we're gonna write and talk about more in the future.
Well, speaking of which, and that was the second most popular blog post. The third one was actually one that you wrote, and it was a topic that we can discuss about do moving averages, still work? I mean, do moving averages work for risk management? And I think you've hit a number of those kinds of things. So you want to speak to that a little bit?
Yeah, there's a list of different content we put out around risk management and bear markets, and I think a lot of it was just timely. If you produce content, you do want to be timely with what you're putting out there. And because of the fact that we went through a bear market and, in my opinion, as of today, are still in one, this type of stuff resonates. So there was a laundry list of different pieces, blogs, and podcasts that we put out around that. And, similarly, if we, begin another bull market, I'm sure we'll touch on those topics. We're not fear mongering or anything like that. It's just a matter of hitting topics that are timely for today's news.
Right. And just to be clear, is there's obviously a consistent theme, and you mentioned when you find something that works, keep doing it. The first quarter, two of the most popular blog posts were two more that you wrote. One of them was how do you let's see, I'll make sure I get these right. How bear markets can humble a buy the dip investor. And the dangers of calendar year returns, right? Both topics that just, again, advisors need to keep on top of things that, can affect their clients, can affect the way they invest, the way they choose strategists, and the way they do due diligence. So, yeah, it's education, right? I mean, a lot of this is educating advisors about things that are good to stay on top of.
And we like to poke at things that, we don't think make sense or that people sweep under the rug. So we'll continue to hammer on those type of topics for sure.
All right, so those are a few of the blog posts that were certainly considered well read in the scheme of all of them that we produced. As we move forward and talk about podcasts and look at some of the podcasts that advisors found relevant, I think the first one actually falls right in line with the last podcast we talked about. It was our YCharts interview. So you want to speak to that a little bit, why that one was popular?
Yeah, this is a lesson in working with partners. YCharts agreed to sit down and do a podcast with us, which, it's not hard to find partners that want to do that. But the second part's most important is that they promoted it. They threw it out there into their social media channels and email, and it got a lot of play. I think that's the most important lesson to be learned here, is to work with partners and come up with a plan to distribute content. Secondly, I just think it's a good product that advisors should look at and are intrigued by. It's a very clean user face, tons of data. If you're doing any analytical things, or even putting content out yourself for clients, and want an easy, quick way to chart, YCharts is just a phenomenal tool, and we're doing more with them too in terms of SMA data and some things that are coming out in the next quarter or two. So they're a big partner of ours, and the success of that podcast is points to their participation in getting this content out.
Yeah, absolutely, and hopefully, I mean, we may do another interview with them before long. I mean, in the process, you want to make sure that that you do find good partners. I find that YCharts is very easy to use, and we've been happy with it, and obviously they make a good partner to do that sort of thing.
And so the other podcast that was that
so
came
any other
up, go ahead.
Well, I was going to say before. Is there anything else about YCharts that you like? Sum it up. What's YCharts in just a couple of words? I mean, why is it that it's so great?
They take Morningstar data, which a lot of people use, and just present it in a cleaner user interface and easier to pull information. So there's a lot of software systems out there. The problem is it's just too difficult to extract what you need. And don't get me wrong, YCharts has difficult portions. But for the average user, it's easy to get in there, get the data you want, and present it to clients, or present it in a social media post or whatever you want.
Yeah, that's great. I think a good example of that is I was doing some due diligence on different SMA databases and so forth. Is I looked at one that had and I've used it before. It's Morningstar, right? And it's very expensive, but they have all this great data in their online database, right up to the point where there was one piece of data that I have to have for every manager I review. Well, it doesn't cost extra, but that's in their old architecture program, so you have to run both, to be able to put these pieces together. And it's like, what? Are we still using desktop software? I mean, does that happen anywhere? So anyway, what else?
One of the other podcasts that came out that was popular was about market cap weightings and how the rich get richer, the largest stocks keep growing. The funny part about this is when we posted it, we were joking back and forth about how these large companies have grown and are dragging the index along with it, and it has just exponentially gotten worse or better depending on what you're invested in since then.
Yeah, it makes me chuckle because I found our little, at the time in that podcast, I think we did that back it was May. Yeah, I looked. I want to make sure I get these right. It was May 19th is when we published that. And, at the time, I went back and looked at the price of Tesla. We had a really cool, fun graphic about Tesla versus 6 or 7 other related car companies or motor companies. And the price back then, when we thought we were kind of making fun of them about how high their price was relative to the earnings the company had, it was $808.01 on May 19th. And the last few days, it's been hovering around $1,600. It's doubled in the last couple
here's
months.
The funny joke.
They haven't doubled their revenue.
Here's the
what
funny
the hell?
joke that always comes up is, Tesla gained a Ford today in market action. They're essentially, in 1 days of market action, gaining the market cap of entire car companies. And so, look, we're not going to dive into the fundamentals here. It is what it is. There, ride the train or get off of it. Those are your two choices.
Yeah, well, you just told me yesterday about a stat on the top 5 companies. You got that one handy?
I think for the Christopher can throw this in there. Something Sentiment Trader is someone I follow on Twitter, and I get his email. Really good provider of these timely statistics, and essentially, it's the first time since 1979 that 5 stocks make up more than 20% of the S&P 500, and so. It's I saw another stat today actually that was pretty cool, like year-to-date performance, and we're recording this on 7/23. Year-to-date performance of the top 5 stocks is 32%. Year-to-date performance of the other 495 is -5, and so
Yeah, that's
and
great. That's so
and then the
perfect.
year to date of the S&P, I think, was like up 2 because of that. So, look, whatever. I hate the term. It is what it is. But what else can you say? It's the these market tops are formed like this. I'm not saying this is one, but you have so much weighting in these top performers. We'll see how it unfolds. But I think that's why the podcasts are so popular, because these stats are all over the place and people are scratching their head about it. And Tesla may join everyone as trillion-dollar companies in the near future. We might just have 5 companies and the rest of us just sit at home and get UBI.
Yeah, there you go. There you go. Well, it's interesting. So we have another. I don't even remember when it was written. We've got another podcast on index returns. So that may be worth hopping in the mix here. If you're interested about that concept.
Well,
But yeah, I think that was a
to
fun
this
one.
point, we talked about this, and I want to do a blog or a podcast on the index constitution. I was listening to a podcast the other day where they mentioned how Walmart is consumer cyclical and Target's in consumer discretionary or something like that. It's amazing how, because you have one company doing so many things, people don't know where to put it, like what sector it's in. So anyway,
Right.
that's for future references here. So what we always touch upon the takeaways. What's surprising? What shocked you? What do you have?
Yeah, one that. Yeah, so I'm gonna take a step back and without humor reference one that I think it surprised me, because I wasn't sure if our readers, listeners, watchers would take this. It wasn't something that we planned. It was something that just I think very appropriately so. Christopher wrote from his heart, and I think it summed up a lot about what we were all thinking. It is. I will say this: it is very hard to write something about our times that it doesn't jump on the wrong side of some political bandwagon or the right side of some political bandwagon, or just the feeling of the moment, but something that was hard and that was very sincere. And it's called "What Advisors Should Say When They Don't Know What to Say." And it was our most engaged. It was our number one blog post. So that was intriguing to me, that we as a firm, and through Christopher's words, did have something to say, and obviously that was seen as valuable content, and worked its way through the eyes and ears of our listenership.
Well, he had called me, and with everything going on with the riots and the pandemic and all this stuff that was happening, and he said, "Hey, man, I got something I want to write. I won't get too political, but I want to write something." And I said, "Yeah, knock yourself out. It's." We don't hold anyone back when they want to share their feelings, and advisors are in a tough position because you have a book of business, and some people are conservative, right, and some aren't, and you don't want to get in the middle of that. But I think there's a way to talk about things without, and I think Christopher really nailed it. And so yeah, there's a reason why it was the top performer. So definitely check that out on our blog page if you get a chance.
Yeah, and if this helps put some perspective on it, the end result is, there's always room for kindness, right? Don't worry about what political this or color that or whatever, right? The more kindness we all have, and the more we all show to each other, man, does life get a lot easier. I mean, that's it in a nutshell.
Well, my kid has a shirt. My Kaka has a shirt that says "Boys will be boys," but then the "boys" is crossed out and it says "kind humans." And so it's we're just trying to raise kids who are nice. So anyway, the other thing that came up that was surprising, and this is actually quite funny, is that one of the best performing podcasts of the past quarter was the podcast that reviewed the content of the first quarter. And,
oh, we struggle so hard to come up with new content, and that's the winner.
Yeah,
right?
I mean, for folks producing any content, you hit a wall, and sometimes you're like, WTF am I supposed to do right now? And so we came up with this idea to review the first quarter's content and talk about what did well, and that ends up being one of the better performing podcasts of the second quarter. So let's see if we can keep this avalanche going.
Yeah. Well, we're supposed to double down, so can we just do a best of last week?
Why not? Yeah, I'm down.
Essentially, it's look. If we say Cliff Notes, we probably have to pay a royalty. So let's not say Cliff Notes. But I think that's sometimes I think that's advisors are so short on time, and we've said that before, right? I did this in a recent podcast. The more independent you are, the more hats you wear. The more hats you wear, the less time you have, and to be able to soak in some of this stuff, our top content of the quarter, I guess, is a great place to start.
For sure. All right, I think that wraps up Q2. What recommendations do you have?
Yeah, so I'm gonna throw one out here, and I know I even gave Christopher a couple of pictures and a little short like 10-second video he might throw up here. Well, not throw up. He's not sick. He might put up on the screen. We are staying right now when we're recording this. I'm in Nashville, just east of Nashville at Piercy Priest Lake, at Safe Harbor. My recommendation is Safe Harbor RV Resort. Really, really nice place. It is one of the most well-maintained RV parks that we've been at. And essentially, if you think about a big lake, this is on a peninsula that goes out into the water. And so there's just a few rows of RVs. Now, most of them are out in the sun. We, however, are in the shade, and it is absolutely drop-dead gorgeous. I can walk down the hill right to the lake and start fishing. So if you're in the area or you're looking for an RV park and don't want just yet another one with row after row after row of RVs, this is gorgeous. It is expensive, but it's gorgeous. So anyway, kudos to them. I mean, here's an example. We started laughing when we came in one day, and they were repainting the parking lines in their little extra parking area. Mm. Okay, I would have just washed it off because, I mean, you could see the white lines. There was no doubt you could see but they were down. Literally, this person was taking like 2-inch strokes with a brush to make sure that he got that line white. But that's the mode that they take here. And that's impressive because most RV parks aren't that nice.
Attention to detail. Yeah. All right, cool. Well, my recommendation this week is on real estate. So I've always wondered, it's 2020, why do I need a real estate agent to purchase a home? I'm doing all the research. Everything's on Zillow. Yeah. There's no private information that MLS has. And so what is a real estate agent earning their 3% commission on? And so I was introduced to a firm called Spicer Real Estate in Maryland as we're planning possibly moving back. And so what they do is they let you do all the research. You find any homes that you want. They'll come and show you the home, charge you an hourly rate. And by the time it's all done with the contracts and everything, you get the 3% minus their hourly rate as a rebate. And so the point being is if you're buying an expensive house and you end up, the 3% comes out to be, 20 to 30 grand, their hourly rate will be, in the, 4,000 to 6,000 range, depending on how many houses they're going to show you. But if you do all the research and you come down, you bring it down to 3 homes and they will then take you to them and do the contract and all that stuff. This is, I think, a valuable service, and you get that rebate entirely back to you. Now, look, if you sell a house, yes, you can make the argument, the marketing and all that jazz. But for buying a house, I mean, most of us can do everything online ourselves. I mean, you don't really need access to an agent.
Yeah, I think that's a great differentiator, buying versus selling. I would agree. As I'm on the opposite side of the spectrum, and when I sold a house just a couple of years ago, it was for us. It was we looked at some of those scenarios, and we decided that from a marketing standpoint, we knew that we wanted to get rid of it and get rid of it quick, because we wanted to move on, and so we did go ahead and pay a full real estate agent in that scenario. And likewise, sometimes from a buyer standpoint, they won't work with some of these other iterations. But when you're buying, I know when we looked at property in Arkansas and ended up finding a place, the first time I went down and worked with the real estate agent that our friends had used to build their house, I gave him here are the sheets of the 10 places that I want to see in geographic order. Now, this is in sort of quasi-mountainous area, right? So there's no straight road anywhere. And he just laughed. He started looking through it. And he's like, so what do you need me for? And I
don't.
How about for less commission? Yeah,
Give
exactly.
me my rebate.
For less commission, let's really talk this through. But anyway, it is what it is. I think you're right. I think as times change, this business of real estate will change just like every other business has had to change. Ours certainly has over the last 10,
That's
15
for sure.
years.
All right.
So anyway, any other parting thoughts on
I
that
think
note?
we're good.
All right, we are out, brother. We'll talk
All
to you
right,
next
bye.
week.